Good afternoon and welcome to Financial Booklet. It is Sunday, January 11th, 2026. I'm your host, and today we are breaking down the latest developments across the global economy, from shifting geopolitical ties in the energy sector to major regulatory milestones in the digital asset space. We have a packed report covering market movements, technology updates, and policy shifts. Let's dive straight into the facts. Starting with the energy sector and geopolitical developments, crude oil prices settled sharply higher this weekend following reports of escalating protests in Iran. This volatility comes as the United States and Venezuela explore the possibility of restoring diplomatic ties following the capture of Nicolás Maduro. Concurrently, reports indicate that former President Trump is focusing on Venezuela's oil industry, though analysts note that the sector faces significant infrastructure challenges. Domestically, Mr. Trump has also made headlines by calling for a temporary 10% cap on credit card interest rates, citing affordability concerns for American consumers. In other commodity news, sugar prices slipped as the US dollar strengthened against global currencies. Meanwhile, in the Middle East, battery giant CATL launched its first new energy aftermarket hub in Riyadh, signaling continued expansion in the renewable infrastructure sector. Turning to the technology sector, Google has officially overhauled Gmail with its Gemini 3 integration, transforming the email platform into a more active AI assistant. However, news regarding Google's leadership indicates that the company's founders are departing California. On the regulatory front, the Australian regulator has flagged the AI platform Grok, following a rise in complaints regarding image abuse. In corporate governance, filings reveal that a director at Rigetti Computing sold shares worth approximately $1.3 million. Moving to digital assets, there are significant developments in institutional adoption. BNY has launched tokenized bank deposits specifically for institutional clients, marking a move by traditional finance toward blockchain-based settlement. In the regulatory sphere, Ripple has secured registration with the Financial Conduct Authority in the United Kingdom, allowing it to operate as a registered crypto asset firm. Regarding market data, the Bitcoin network saw a decrease in mining difficulty for the first adjustment of January 2026. Data from Bitfinex suggests that large holders, or whales, have reduced long positions. Additionally, the asset manager VanEck released a report explaining their base case valuation model for Bitcoin looking toward 2050. Finally, the community is marking the 17th anniversary of Hal Finney's historic Running Bitcoin post, while the Ethereum Foundation S director stated that the network's future relies heavily on the implementation of zero-knowledge proofs. Rounding out our coverage with broader market and policy news, federal agencies have released the new annual asset size thresholds under the Community Reinvestment Act regulations. On the fiscal side, a shooting involving ICE agents has triggered a new budget standoff in Washington, with lawmakers facing a looming shutdown deadline. In equity markets, historical analysis released this weekend highlighted that the stock market is currently exhibiting price action patterns witnessed only twice in the last 153 years. That brings us to the end of today's market update. We will continue to monitor the situation in the energy markets and the unfolding regulatory landscape for digital assets as the week begins. Thank you for watching Financial Booklet. For more details on these stories, you can check the resources listed below. Have a productive week ahead.